There are several banks all around the world that actually pay you, compensate you for giving them your money. Or more correctly, they give you a bonus if you leave your money on a checking or saving account of theirs. This happens every year, and people moving to Italy are used to pay some taxes on this amount. Nothing crazy. Usually we're still talking about few percentages, but still a part of the profit. In Italy, we call this source of income passive income, since actually you're not actively working to produce that. Same label for dividends and capital gains in general, the other kind of revenues that you may get by just investing your money in bonds, stock market, and trading account in general. As I said, very often these amounts are already taxed at source in your home country, or at least you have to recap everything in a foreign tax return and maybe pay some taxes on that. So what happens when you move to Italy? You're safe, or you have to pay a difference? And if so, how much is the difference? Generally speaking, for passive income, you suffer an alternative flat tax of 26%. And please listen carefully. It's not incremental like the income tax, the 23 to 43%. And the 26% is applied on interest, dividends, and capital gains. If you already paid some taxes in another country, things get a little bit more complicated because we must take a look at the international tax agreement in force that Italy signed with that given country, if there is any, of course. Most of the cases, you can use up to 5 or 15% of the taxes paid there as a discount. So in Italy, you will pay just the difference. Or vice versa, the country of origin is limited to applying a withholding tax that cannot exceed those percentages. So in practice, in real life, countries like to forget about this tax rule and they apply, their own rules, the regular rates, even beyond the 15%. And also in some cases, Italy will exclude some type of passive income from the tax credit application. So you may find yourself paying almost twice as much in two countries on the same gross amount. As you can see, there is no one way only regulation that you can apply no matter what. However, we can state that passive income in general is actually taxed in Italy if earned abroad. So remember to put in the Italian tax form everything related to passive income earned abroad in the modello redditi form. And then, hope for the good and hope that the tax agreement provides some good news for you. Worst case, 26%.